Hi, GST stands for Goods and Services Tax. GST may be defined as a tax on goods and services which is liable at each point of sale or provision of service. Its main objective is to consolidate all indirect taxes except customs. How it will overcome the disadvantages of present indirect tax structure and create efficiencies in tax administration. In India, the GST model will be dual GST, having both central and state GST components levied on the same base. The significant features of dual GST are: there will be central GST to be administered by the central government and state GST to be administered by the state governments. Central GST will replace existing SENVAT and service tax, and state GST will replace state VAT. Central GST may subsume indirect taxes on supplies of goods and services like central excise duties, that is SENVAT, additional excise duties including those levied under Additional Duties of Excise Goods of Special Importance Act 1957, additional customs duties in the nature of countervailing duties, that is CVD, SAD, and other domestic taxes imposed on imports to achieve a level playing field between domestic and imported goods which are currently classified as customs duties. Cesses levied by the Union, that is cess on rubber, tea, coffee, etc. Service tax, central sales tax to be completely phased out. Surcharges levied by the Union, that is National Calamity Contingent Duty, education cess, special additional duties of excise on motor spirit and high-speed diesel. State GST may subsume following state taxes: value added tax, purchase tax, state excise duty except on liquor, entertainment tax unless it is levied by the local bodies, luxury tax, octroi, entry tax in lieu of octroi, taxes on lottery, betting and gambling. The input of central GST can be utilized only for payment of CGST, and input of state GST can be utilized only for payment of SGST. Cross utilization of input of CGST in payment of SGST and vice versa will not be allowed. Other features: taxable event in case of goods will be sale instead of manufacture. Exports will be zero rated and will not have any other taxes at central or state level. Exempted goods include life-saving drugs, fertilizers, agricultural implements, books, and several food items. Certain components of petroleum, liquor, and tobaccos are likely to be outside GST structure. State excise on liquor may also be kept outside GST. Taxes collected by local bodies would not get subsumed. The rates will be prescribed separately, keeping in view of the revenue consideration, total tax burden, and acceptability of tax. Thank you.